Well, the Fed did exactly what they were expected to today. With interest rates at Jimmy Carter levels, they took the unprecedented, nigh Paul Volcker-esque step of jacking interest rates all the way up from 0 to 0.25%. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Well, as Max Kaiser is so fond of saying, you cannot taper a Ponzi scheme. And Jerome Powell absolutely did not attempt to taper that Ponzi scheme today, with the Federal Reserve announcing a 0.25% interest rate hike today. Of course, the markets were all in a tizzy in the last few days because nobody knew for sure what the Fed was going to do, although pretty much everybody with a brain was saying that they were going to give a very token interest rate hike, but absolutely nothing else, which is what happened. Had they, of course, increased interest rates, the risk was that the stock market was going to tank and that, of course, Bitcoin would follow along as people rush for the safety of treasury bonds. Well, with the announcement of the 0.25% interest rate hike, the Dow, of course, did not crash, gaining 1.5% this afternoon, and Bitcoin soared almost 4% this afternoon because, quite frankly, who in the hell would be stupid enough to sink their money away for 10 years to earn 0.25% interest? Well, with that said, today is Wednesday, March 16th, 2022, and that means it is DCA Wednesday. Are you ready to stack those sats, you sexy sat stackers? Before we get that stack on, a quick look at the vital statistics. We are currently sitting at a block height of 727,660. Bitcoin is worth $40,945 a coin, and one cuck buck will get you 2,442 sats. And both of those numbers are sitting pretty close to where we were last week. We're up a little bit with a market cap of $777.3 billion, and we are now 126 days out from our all-time high. That is, it's been 126 days since we hit that all-time high around 69,000, and we're currently down about 40.7% since then, which is not quite the 41% we were down last week. Things are looking a little bit busier on the blockchain. It's currently going to take approximately 3 blocks to clear the mempool. That's because there are 4,926 transactions currently pending, at least according to my mempool. And some of those appear to be rather large transactions because it wouldn't normally take 3 blocks to clear 4,000 transactions. That being said, however, one sat per byte transactions will still clear within a day. And just like last week, it looks like 9 sats per byte will guarantee that you are in the next block. As you know, the statistic that I like to pay the most attention to is the 24-hour, I'm having a hard time talking today, aren't I? The 24-hour transaction rate. And that is currently humming along at 3.30 transactions per second, which is down a little bit. Actually, that's up a little bit from the 3.23 transactions per second we saw last week. And it's definitely well above the 3 transaction per second minimum that I like to see as indicative of a healthy amount of activity going on chain. Of course, those are only on-chain transactions and don't take into account all the activity that's going on second layers, such as the Lightning Network, or just trades going on in exchanges where you're buying and selling Bitcoin without, hopefully you're moving it off the exchange. But for those that are not, there's actually nothing really happening on chain when you're buying Bitcoin from Coinbase or Kraken and not moving it to your personal custody. We are about 116 blocks away from the next difficulty adjustment, and that's scheduled to be about 18 hours from now. And depending on where you look, that's going to be either a decrease of 0.5% or possibly an increase of 0.14%. Last adjustment, of course, was a downward difficulty decrease of minus 1.5%. And even though we're less than a day away, things are in flux. You never know what that adjustment's going to be until it's time. Currently, blocks are averaging 10 minutes and 3 seconds, and that is pretty close to the target of one block every 10 minutes. Last Wednesday, it was averaging 10 minutes and 25 seconds. So either some of the hash rate that might have blinked off during the Ukraine conflict, etc., is back online, or miners are just a little luckier than they had been, because we're getting pretty close to a neutral, we're getting pretty close to actually having either no increase, no decrease. I mean, 10 minutes, 3 seconds is pretty close to the 10-minute target. But again, a lot can change in a short amount of time, but as it stands, we're looking at barely any movement on the difficulty for mining difficulty. All right, why are we here today? Well, we're here because today is DCA Wednesday. And DCA Wednesday, of course, stands for Dollar Cost Averaging Wednesday. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. And the reason why we're conducting this experiment is because you see all the time online on Reddit, on Bitcoin Twitter, people saying, is it too late to get in? I only have X number of dollars to invest. Is it even worth buying such a little amount of Bitcoin at this point in time? And we set out to test that out for ourselves and to see if that's true. As I said, the concept of dollar cost averaging is that you invest your money in equal portions at regular intervals, regardless of price. And our equal portion is $20. We chose $20 because that's not a lot of money for our average listener. And I wanted to demonstrate that the dollar cost averaging can be a effective way to stack sats, even at such small amounts. Of course, what you invest is up to you. Do your own research, you do you. But we're going to invest $20 as usual. And our regular interval, we chose Wednesdays. Once a week is a pretty standard time frame for people who dollar cost average, whether it be in stocks or Bitcoin or what have you. Some people stack daily. There are services that let you stack hourly, and other people stack maybe once every 2 weeks whenever they get their paycheck. They set aside a little bit from each check. So since most people get paid every 2 weeks, that might be when you choose to dollar cost average. Some people DCA monthly. Again, these are all personal decisions that you have to make, but consistency is key. And so we chose $20 and we chose Wednesday. And this is going to be our 34th stack. We started stacking all the way back on July 28th. And we've stacked 34 times so far. 33 times so far. We've stacked a total of $660, of which $14.85 of that was fees. But that $660 got us 1,370,026 sats. That's currently worth $560.95. So we are down a little bit, obviously, almost $100. Of course, some of that is fees. But the main thing about Bitcoin and the main thing about dollar cost average is that it's a long-term strategy. It's definitely not a get-rich-quick scheme. We did start this test kind of in the middle of the bull run. We started after the first pump, the Elon pump, where it hit 60,000 the first time in like April, but before the second top where it hit 69,000 in October. But as a result, we've bought a wide range of prices, as low as $36,000 and as high as almost $67,000. And that's the nature of dollar cost averaging. But again, this is a long-term play. As they say, time in the markets beats timing the markets every time it's tried. And if you are out there on Bitcoin, Twitter, or Reddit, I'm sure you've seen the stories of the number of people who have been absolutely wrecked by trying to time that market. I mean, even I've been tempted to try and time the market. And I've done purchases other than our DCA stack, the old BTFD. Just because we invest every Wednesday doesn't mean if Bitcoin's really low on a Saturday or on a Thursday It doesn't mean you don't buy then also. But we're not including our buying the dip in this stack. For the purposes of this experiment, we're only including our Wednesday stacks of $20. And as a result, we have purchased at an average cost basis of $48,174.27, which isn't too shabby, especially if you believe like me that Bitcoin still has a long way to go. If you believe in the 210,000 theory block, Bitcoin has never been worth less 4 years in the future than it is on any given day. So, for example, if you take the price of Bitcoin right now, 4 years ago today, it would have been cheaper. That's always been true for the entire history of Bitcoin. Obviously, as they say, past results are no guarantee of future performance. But if you believe like I believe that Bitcoin has a long way to go, even if it doesn't become the world's #1 reserve currency, it has a long way to go. Even if it only replaces, a portion of what people have invested in gold, there's a lot of room for growth. So there's no reason to believe that 5-10 years from now, Bitcoin won't be worth a heck of a lot more than it is now. And so dollar cost averaging or investing in Bitcoin in general is a long-term strategy. And we are in no position to judge the success or failure of DCA as a strategy at this point in time. But it is fun to see where we're at. And where we're at right now is we have 1.3 million sats. And we got that for $660, and we did that investing only $20 at a whack. So even without judging the performance of the dollar cost average strategy, I think we've demonstrated pretty handily that even if you only have as little as $20 to invest, you can build up a decent little investment pretty quickly. It's been less than a year, and I think even people that live in a even for people where $20 is absolutely nothing, $660 or $560 in this case actually starts to look like some savings. And if you're in Africa or El Salvador or trying to escape Ukraine, $560 can be life-changing for you. So we are going to continue this tradition by stacking another $20 today, and we're going to do that as always on the Cash App. And the reason we use the Cash App is because I think it's the easiest way to stack sats. It isn't necessarily the cheapest way to stack sats, and it might not be available where you are. So pick an app that you're comfortable and familiar with, but we're going to use Cash App. And as usual, I don't have any money on Cash App, but that's one of the reasons I love it, is because all I have to do is, I've got a debit card linked to Cash App, so all I have to do is add $20, and it is instantly available for me to spend. So we're going to tap the little Bitcoin logo in the bottom right-hand corner, tap buy, enter $20, and it is going to ask us to confirm, and it says that we are purchasing at a price of $40,916.70, and that's going to get us 47,780 Satoshis after a 45-cent fee. Cash App does charge about 2.25%. Which is relatively inexpensive when you're buying small amounts like we are. Again, you pick an app you feel comfortable with. We're using Cash App. So I'm going to hit confirm. And voila, just like that, we've purchased an extra 47,780 sats. And that brings our stack up to 1,417,806 sats, currently worth $580.11. So we're still down a bit, but I think we have stacked what would be a considerable amount of money for people that were just a few months ago saying I only have $20 to invest. In addition to that, if Bitcoin does hit that $1 million mark one day, let's say it hits the moon, and your moon may be 100,000, your moon might be 10 million, but just for fun, if it does hit that magic 1 million mark, those sats will be worth $14,178.06, and there is absolutely no way to say that that is not a significant return. So that might be pie in the sky, that might be wishful thinking, but it sure is fun to think about. And today's purchases also continued to lower our average cost basis. Our average cost basis is now $47,961.43. That is down $212.84 from what our average cost basis was right before we made this purchase. So the nice thing about DCA is that while Bitcoin is down, it's allowing us to stack cheaper sats. So when Bitcoin eventually goes above 47,961, we will be in the green again. All right, well, I wanted to keep this one short and sweet. I know there's a lot going on, but we actually really haven't had too much time to digest most of the news. It seems like everybody's paying attention to what's going on in Ukraine more than anything else. I have heard a decent number of Bitcoin stories coming out of Ukraine, but it, as being a situation that's in flux, it's kind of hard to see through that fog of war. But it would also be hard to imagine that people are not finding Bitcoin incredibly useful there, especially since before this whole shenanigans started, Ukraine was already one of the countries with the highest percentages of Bitcoin adoption in the world. So we're getting to see that play out in real time, and how it plays out, I guess we won't really know. That's one for the history books, but I'm cautiously optimistic that Bitcoin is silently playing a role there, maybe more publicly playing a role. There was an article that came out earlier this week saying that something to the extent of 40% of all the donations that have been pouring into Ukraine to help the Ukrainians, to help them buy arms, to help them evacuate, is coming in the form of crypto. It did say crypto. It didn't break down specifically how much of that was Bitcoin, but I would have to imagine that since Bitcoin is the granddaddy of them all, that it was at least a large percentage of that. There's another news article I saw breaking right before I started recording that said President Zelensky just signed a bill into law that basically legalizes Bitcoin. It formalizes Bitcoin a little bit more, allows banks to hold or trade Bitcoin. Again, I don't have the full text of that legislation, and it's hard to imagine that we're actually going to get to see it, or that the parliament is actually even meeting right now with all that's going on there. But a lot could be playing out right before our very eyes in Ukraine. And I know that if I were trying to escape a war-ravaged country with just my family and the clothes on my back, that the way I would be doing it was by moving my wealth in Bitcoin. But that's how you and I would do it. It remains to be seen what percentage of the people in Ukraine are actually doing it. And of course, our thoughts and prayers are with our friends in Ukraine during this difficult time. Anyway, I wanted to keep it short and simple today, but I wanted to make sure that we did continue to stack. One way to avoid the drama of finding it late in the afternoon or finding yourself mired in some project and not remembering to get your stack on is that things like the Cash App will let you automate this. There is an option to set up an automatic DCA where it would have just made this purchase for us automatically. As you know, if you've been listening, I'm a glutton for punishment, and I like to watch the charts way more than I probably should, and I like to make those purchases manually. One of the things you hear from gold bugs all the time is the reason they prefer gold is because they can hold that gold coin in their hand. They can physically feel it. And for me, opening the Cash App, tapping on the Bitcoin logo, entering $20 and hitting purchase, that just feels like I'm holding the Bitcoin. So maybe that's how I overcome that tangibility aspect that some people have a hard time wrapping their heads around when it comes to Bitcoin. Either way, thank you for listening, and we're going to keep getting our stack on every Wednesday till Bitcoin either goes to the moon, Bitcoin crashes and goes to zero, or you just get bored and stop listening. But until then, keep stacking those sats, you sexy sat stackers.